Hello and welcome to Nepali Business Talk. For past couple of months, Social Security Fund has been one of the major talking points in Nepal's business scenario. Social Security Fund has already come into force from Shrawan 2076. Yet there are a lot of confusion and questions regarding Social Security Fund. It is already decided that a total of 31% of basic salary of employees is required to be contributed to Social Security Fund. Out of this amount, 11% will be contributed by the employees, whereas additional 20% is required to be contributed by the employers. The total amount contributed to Social Security Fund will be used for four different schemes. The first scheme is Medical Treatment, Health and Maternity Protection Scheme, which will use 1% of the total amount contributed. The second one is Accident and Disability Protection Scheme. The third one is Dependent Family Protection Scheme. Both of these will use 1.40% and 0.27% of contribution amount respectively. The largest amount is being dedicated to Old Age Protection Scheme, which will use 28.33% of total amount contributed. In this periphery, in today's episode, we'll try to answer some of the major questions that we are getting regarding Social Security Fund. One of the major questions that our clients ask a lot is it mandatory to get enrolled with Social Security Fund and start depositing the contribution amount to it? Now the answer to this is pretty simple. Yes, it is mandatory to get enrolled with Social Security Fund and start depositing the contribution amount to it. This is true irrespective of the fact that the employees had been previously contributing to Employee Provident Fund or Citizen Investment Trust or similar other funds. A simple relaxation in this matter has been given to government employees, in whose case applicability of Social Security Fund will be as decided by Government of Nepal. A slight confusion in this matter was also created by online news portal, who reported that in case the employees had been previously depositing amounts in Employee Provident Fund or Citizen Investment Trust, they would have an option to choose whether or not to deposit the amount to Social Security Fund. But this was never the case. Now, this brings us to another question as to what will happen to the amount already deposited in Employee Provident Fund and Citizen Investment Trust. The operating procedure of SSF has been updated to answer these questions. Now, the employees will have an option to carry forward this amount to Social Security Fund or withdraw them, or to keep it as it is in this fund itself. Another question that we are getting a lot is, when are we required to start depositing the amount to Social Security Fund? Recently, Social Security Fund issued a notice in this matter also. All the employees that have been listed prior to Shrawan 2076 will have to start depositing the amount from Shrawan 2076 itself. However, for those who have not already listed with SSF, an extension of time has been provided till ASOS 2076 for enlisting. Till that time, they can deposit the amount as they have been doing previously, and after they are listed with the SSF, they will have to start depositing the amount in Social Security Fund itself. And at last, one major confusion is regarding 1% Social Security tax. Many of our clients have been asking us if it is required to deduct 1% Social Security tax and deposit it with IRD once you start depositing contribution amount with SSF. The answer to this question is no, you don't have to deposit it. The Finance Act 2076 has made a change in the proviso clause of rate of tax to natural person, which effectively provides that once you start depositing SSF amount in the accounts of SSF, then you will not have to deduct and deposit 1% Social Security tax. That is it for today's episode. If you have any suggestions or queries in this matter, you can drop it in the comment box below, or you can also send us a message. Thank you for watching.